Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, April 18th, 2016. Well, take a look at the S&P 500 here via the SPY. Notice again, extremely light volume again, 50.6 million shares traded, and literally we're talking about 2:30 in the afternoon, so just an hour and a half until the close. All eyes are now turning away from oil to earnings. All right, earnings after the bell today. What companies report? Very simply, IBM here. And you can see IBM trading up a little bit into earnings, and Netflix. Those are the two main companies. There are lots of other ones, but these are the main ones. Take a look at Netflix today. Obviously, bigger money selling into earnings versus IBM, which is rising. Now, I will say this. I still think IBM will pull back on earnings. All right, overall, you have to think that that stock has had such a crazy run. In fact, let's go to the daily charts on these and take a look here. Let me get rid of a couple of these trend lines here. But overall, yeah, I mean, it has been quite something here to see. And this is actually Netflix's chart, believe it or not. Look at this inside bar pattern. So I actually am bearish on Netflix going into earnings, although the fact that it's down $4 ahead of earnings kind of takes a little sting out of possible reaction. But again, take a look at this, guys. Sharp down move and inside bar action here. This is all inside, which would be known as an in spirit of bearish retrace or bear flag pattern. All right, now the one positive to it, it's above the moving averages, but on earnings, that could gap below very, very easily. I would be negative on the bias going into earnings, but again, anytime you buy into earnings, you're really taking your own health into your hands. In other words, it's a lot of risk, a lot of risk. Now take a look at IBM though. IBM's kind of interesting here. I have so many resistance lines up here. Look at all of these here. Pivot high, lots of little pivot areas right over here. This, again, to me, is a chart I believe will pull back. What I like about this one as well, let me get rid of these so you guys can see it a little bit more closely. But on this chart for sure, I mean, we're talking about an actual inside bar pattern. Look at this. So see this little topping tail right here? See the topping tail? So very minor, very small topping tail. But look at the fall it had. And then look at how over the last 2, 4, 6, 8 days, it's traded sideways to up, but it hasn't taken out that high. On a micro sense, and micro meaning small sense, on a small time frame, that's actually a bearish inside bar pattern. In addition, what you have here is you're still inside of this bigger move down. So overall, I would still say the larger trend on IBM is to the downside, even though it's had a tremendous rally. And I mean, I tip my cap to the rally on IBM. I mean, it's been amazing. But overall, you still have to see the micro pattern is bearish and the macro pattern is still overall bearish. So what am I looking for on IBM? I think IBM could fall from 152 and change all the way down to about this area here. You have the 200 MA at around 143, and around 140 you have the 50 MA, somewhere in that vicinity. So I'm actually looking for anywhere between a 9 to, I would say, $12 sell-off on IBM going following earnings. Okay. Now, again, I give you these projections, but I caution it with an asterisk, saying that this is very high risk, folks. I mean, there's no doubt about it. I mean, I would never suggest buying options into these based off of this. It's more for fun that we analyze them and we test the patterns out. Will you be right more often than you're wrong on earnings by analyzing it using the PPT methodology, which is what we highlight here at InTheMoneyStocks.com? Absolutely. However, when you're wrong on a play, when it fails, and let's say even just 3 out of 10 fail, right? So, I mean, still 70% batting average is awesome. But if 3 out of 10 fail, you have to understand that the moves in the opposite direction could be humongous, and you're dealing with earnings, right? So, I mean, it could be a $20 gap up on something like Netflix or on IBM, and that's a lot of risk to take, and that's why, for me, it's more of a just kind of analyzing it and giving you suggestions overall, rather than really saying, put heavy money there. Now, again, you want to play a few shares, by all means, that's up to you guys. I just would strongly encourage you to be very careful. It's a lot of risk. Risk tolerance has to be taken into account here. Okay, so that's kind of interesting there, guys, and again, interestingly enough here, I just want to look at this. Look at this as well. That's kind of cool. So if we look at from this pivot top down to this little high here, you're actually into that little resistance level there, and even right here as well, kind of coming into that area. So a lot of resistance coming up here, and I just personally I would say the biggest thing to me is obviously the move up here, counter trend to the bigger move is not so great, and that's why it favors the downside. But this little micro pattern is very, very intriguing as a chartist. That's very, very intriguing to a chartist. So bottom line is, guys, that's what we have. These are the two big ones after the bell today. A lot of earnings now starting in this week. A lot more. We had Morgan Stanley this morning report earnings. The bank stocks have really seen a major cut in earnings from the last year or so, but expectations have been so low that for the most part they've performed pretty well. And if we take a look at Morgan Stanley today, you can see it's basically flat. And you can see it hasn't even bounced. I mean, look at the rest of the market has shot up like this, and Morgan Stanley's kind of been right here. So you can see that the expectations were so low, even though the earnings were not good for a lot of these banks, they haven't really seen a lot of selling. In fact, most of them have gone higher. All right, guys, come to InTheMoneyStocks.com. It's a pleasure to be with you. I look forward to helping you make money in any market. Take